Hello everyone, this is Organic Trader. So this video is about market structure. So market structure is one of the most important concepts in price action trading. It sounds simple, but most traders get it wrong. So in this video you will learn almost everything in a very simple manner. So what is market structure? Let's start with the basics. So as we all know, if you have been through SRC and some other stuff, uh, some books of Mark Douglas like Trading in the Trend, you know that market moves in these three manner: uptrend, consolidation, and a downtrend. So what you can see that we buy in uptrend, we sell in downtrend, and we stay out of consolidation. So in a trendy move, there are two types of structures. One is called impulsive, and the second is called correction. So if I mark it right here, this is called your impulsive move. Let me mark it in green, and this part is called corrective move. Let's mark it in yellow. So these are fast moves in the direction of the trend, such as this one and this one. So impulsive moves are fast moves in the direction of the trend, while corrections are temporary pullbacks. So why does this happen? Because it happens because the market is an auction. So imagine gold goes like $4,000 and buyers do not want to pay or buy gold at 4,000. So gold needs to give a correction for buyers to enter another position and for the gold to make another higher high. So this is how things move. So I will just mark two things. In an uptrend, this is called your higher high and this is called your higher low. I will text it as well. This is your higher high. 24. This is your higher high, and this is your higher low, and it is vice versa in a downtrend. So you just need to look for these two things while marking your structure, and it will help you to place Fibonacci retracement tool on the trend structure. So let's start marking our highs. So I usually use 4-hour time frame, 1 hour and 30 minutes. I try to avoid 15 minutes and time frames lower than that. Because market moves in multi-time frames. The more you zoom in, the more noise you will see. So it is better to stick with the higher time frame trend direction. So let's say this is the current market scenario, and right here we can see we were in a downtrend, pullbacks, and we couldn't break this low. So I will just start marking the structure right here. Let's say we are starting from this side. We move up, we make a high, and we make this high. Then we start moving down and this low. Now you can shift between time frames to see it more clearly. Okay. Now you can see this was some sort of consolidation on the 4-hour time frame, but here we can see an actual high and a low, and we can mark our structure accordingly. So we break this high. This was our low, and we this was the high that we created. Now, one thing I need you to understand about the concept of break of structure and choke. So, You can see previous videos for more detailed explanation in the SMC concepts about it, but I will explain it here in a simple way. Okay, the break of structure always happens in the direction of the trend, while choke happens opposite to the trend direction. So if you I mark it like here, this is your break of structure, this is your break of structure, this is your break of structure, this one, and this is your choke. Choke usually means the trend is reversing, and how we react here, we wait for a retracement to enter sales and continue moving downwards. So we use choke for positions like this. So this is a basic scenario. You can see those videos for a better understanding. Okay, so we were here. Now start marking your trend structure. Uh, okay, how to mark your breakout structure? You need to see what was the previous high on the higher time frame that needs to be broken for a choke to happen. We came down, but we couldn't break this low, so this will be a choke. Let me tell you with an arrow. So we are moving in a downtrend. We break this low right here, then we break this low right here. So this is our break of structure in a downtrend. Then we are again coming down and we break uh, we we break this. We come down and make this low. Now this is our lower high and lower low, but this is the low that we created that we failed to break. So for a choke to occur, our higher time frame price action must break and close above this zone. So this will be our choke where we look for buys upon retracement. So how do you react in this scenario? Let's say this all bullish move has happened and now you need to look for buys. I will also cover the counter trend sells right here that we took, but let's first talk about buys. So in a bullish scenario, once you have seen that choke has happened, now you need to place your Fibonacci retracement tool. So how you do it? You take the lower wick of the bullish candle and take it towards the upper wick of the bullish candle. You do not take it towards the bearish candle. So for bullish move, use bullish candle. For bearish move, use bearish candle. Just place it like this. Now, important thing to note is that when in the Fibonacci retracement tool, 23.6, 38.2, 61.8, and 78.6. These are four zones where you need to look for setups to go for buys. Or mostly I look for setups on the 30-minute time frame on these levels. If I find a setup, I go for buys and target zero, or you can extend it above zero if you see any gaps on the left hand side. Okay, so this is how you place it. Now let's break it down that this move has happened and now we need to capitalize on this downtrend move until our price reaches this specific zone of 78.6 and 61.8 because 61.8 and 78.6 are optimal trade entry zones. So I will just remove this one. We will move to a low time frame. Okay, now look, these types of impulsive moves are difficult to catch upon retracement. So we created this high, we placed our fibs almost right here. Now this was the structure. We couldn't break above this high, and but we broke and closed below this low. Now we are moving down, down, down. We move down and we create this low and break it again. so you can mark it as well. Now, one thing I want you to do is to understand how to ignore little noise in your structure. So think in form of waves instead of candles. So our bullish wave started from here, went to this point. Then this bullish wave came all the way down to this point, then went up here, then failed to break this low and came down here. And then it went consolidated here a little while, but it created this high, came down like this, created this high and then moved down. So if when you start thinking in waves and marking your structure in the form of waves, you will be able to place your Fibonacci retracement tool more accurately. Now let's get back to the hourly time frame. Now I'll tell you how to capitalize on the counter trend move. Okay, let's say we are moving down. So how do we capitalize on this? Take your Fibonacci retracement tool. This is the point from where we got the break of structure. We take this and move all the way towards the bullish candle, bearish candle low. We place it like this. Now what we need to do is look for setups. I told you to look for setups in these 23.6, 38.2, 61.8 and 78.6 zones. Now how you can enter right here, you wait for candles to consolidate in these zones, and if not, then these two zones, in between these two zones. So as we can see right here, we had consolidation at 23.6. We tapped, we had a bearish candle formed right here. If you go on to the 30-minute time frame, you can also see that we got a wick rejection, a bearish candle formation, and here we can take sells and capitalize on the bearish move like this. Let's say we entered on the 1 hour time frame. After this candle's closure, we entered right here when the candle opened. Now, to place stop loss, I usually try to put it at this scenarios. I look for support in these zones, such as 61.8. This is a support zone. I place my stop loss right here, and I usually target 1:2, and also book some on my way down. Okay, so the 1:2 didn't actually get hit. We went almost right here about 1.8, which is still a pretty good risk to reward ratio, not bad. So this is how you can capitalize on a counter trend move. Now let's be back right here. Okay, now let's look for buys. Pretty simple. We had a break of structure on the below scenario and we had a choke. These were the buys which I shared actively. So break of structure, then we had a choke, which means a change of character. Change of character indicates that the trend is reversing, and we need to look for uh, bias upon retracement. So how do you look for bias? You take a Fibonacci retracement tool, place it like this, and see we got bias on the low time frame. You can go to 15 is a weak time frame, so I would tell you to stick to 30. I entered bias right at the close of this 30-minute candle at this point. This is the buy. Okay. I entered almost here. My stop loss was this support below, and my target was 1:2. Why do I target 1:2? The win rate is higher, and with just 5 good trades, you make 10% in a month, and easy to pass your challenges. So you can hold it up till this area, which is 5.38, but I choose to book 1:2, which seems which suits me to be honest. Okay, now we go up here and we had a sharp move of sells, and I also shared these scenarios with you, I think so. Let me just see. Maybe I shared in the private group. Yep, these ones. These were the cells I was talking about at this point. Simply place your draw down your fibs, wait for a rejection candle and enter. Boom, cells. So I think I pretty much explained the method I use. So if you have any questions, you can ask on Telegram. This is the chat room you can join, or T free chat room. This one. So you can join this one, ask questions, or share your trade ideas and share anything you would like that might help the community.